So, ladies and gentlemen, welcome back again. Oh, nose masks. Yeah, we are still in Corona times, so wherever you are, please still keep. Let's ensure that we are all getting things done and done right and okay. So now we're talking money matters, and so from one Enoch, I'm passing on to EA Eric, who will take on this session. So Eric, the session is all yours.
And good afternoon, ladies and gentlemen. It's a pleasure for me to moderate the Green Finance session of the Ghana Green Building Summit for 2021. I have some great guests here, people who I've admired in the industry, and I really love the opportunity for them to introduce themselves. I have Ben, Nanayao, Sheikh, and Anel. And so for those who are online, I'll be grateful if you could introduce yourself, starting with Anel. Oh, I think we can't hear you now. So.
Oops. Good afternoon, everybody. Good morning. We're scattered all over the world. It's an absolute honor and pleasure to be joining the fourth iteration of the Ghana Green Building Summit, all the way from Colorado. But as it was last year, this is another event that seems to move the industry forward, and it's an absolute pleasure to be here. Eric, my name is Anele Makwaza, for those who are not familiar. I'm the founder and CEO of Ikuku Global. And Ikuku Global is a technology company making it incredibly easy to search, structure, and trade sustainable assets. And really happy to be here because there's absolutely nothing more urgent than accelerating the flow of capital to the $1 trillion opportunity of building, retrofitting, and financing a sustainable future.
Sure, thank you very much for that. Sheikh?
Good afternoon, everybody. My name is Sheikh Sanonkwa. It's a great pleasure to be here. I'm very glad that such events exist to further the cause. I'm managing partner of HC Capital Properties. We're a real estate investment and development firm. We focus mostly on commercial and residential real estate. We have Côte d'Ivoire and Francophone Africa as the primary market, and Nigeria, Ghana as our secondary market. So pleasure to be here and share our experience in the green space.
A pleasure meeting you. And I guess in the studio, we have Nanayao and Ben. So Nanayao, please go ahead and introduce yourself.
Sure, thanks. My name is Nanayao Kwache. I work as an investment director for Danish Investment Fund, IFU. I am part of the Africa team and constantly sourcing and structuring and then executing investments across the region. We manage close to $1.6 billion in assets, and we invest not just in the green space, but also in different developing areas across developing countries.
Hi, and please go ahead, Ben.
Yes, Benjamin Jeppy Garber, Managing Director with Steed LLC. We are a transaction advisory practice, provide a range of advisory services and structuring services. We have most recently been focusing heavily on sustainable finance. And I think one of the things we're most really proud of is working with the World Economic Forum as a contributor to the recently launched country financing roadmap for Ghana.
No, thank you very much. And I think we have one member here, Philip, who would have a presentation from Access. But just for the benefit of those online, as I said, my name is Eric Appiah from Blackstar Group, an investment bank in Ghana focused on the DCM, ECM capital markets in the country. And we've worked on quite a few bond issuances. So this is pretty exciting for me to be able to learn some of the newer things that are happening in the industry at this time. So we would move on to Philip's presentation, but I'd like him to introduce himself.
Thank you so much. Thank you everybody online and those in presence. My name is Philip Pampofo, and I run the corporate banking business in Access Bank Ghana. Thank you everybody. Okay, I'll take you through a brief presentation regarding Access Bank, what we stand for when it comes to sustainability, what we've done so far, and then probably who we are. So I'll start by sharing my slides here. Okay, everybody can see. Okay. Moving. Sorry, so by brief introduction of Access Bank, who we are a fully fledged full service commercial bank. And we operate through a network of more than 600 branches and service outlets across the globe. And that currently spans 3 continents, including the UK and then the United Arab Emirates. In Ghana, we currently drive financial inclusion from 11 out of the 16 regions that we have, and it's still continuing. Access Bank, we have sustainability embedded in whatever we do as a bank, and so much so that it's even embedded in our mission, which is setting standards for sustainable business practices that unleash the talent of our employees, deliver superior value to our customers, and provide innovative solutions for the markets and communities that we serve. And like I said, we promote our corporate philosophy on sustainability and encourage all our stakeholders to uphold same. At Access Bank, every year, 1% of our PBT is devoted to drive sustainability. And it's to this extent that as a bank, we find ourselves aligned with the 4th Ghana Green Building Summit as a co-sponsor. In line with that, as in leading the charge for sustainable stability, especially for greener and healthier environment, we are always guided by what we call sustainability statement. And it reads like, impacting lives positively now and in the future. And I must say that this statement guides all that we do when it comes to sustainability. So this slide will take you through the milestone that we've achieved as a bank, right from 2008 to date. We started in 2008 when we launched what we call employee volunteer program, where every staff in the bank is involved, where we compete to embark upon green projects, said that the unit, the group that comes up first, awarded marks that count towards their appraiser marks towards the end of the year. We never ended there. In 2009, we became the pioneer Nigerian financial institution to be a signatory to the Equator Principles. And in 2010, we embedded sustainability into our corporate philosophy. It followed through to 2013, when we also embedded sustainability into our vendor criteria, i.e., any vendor that comes to work for the bank must make sure that you pass our sustainability criteria before you are selected. In 2014, we developed what we call robust sustainable strategy that was themed Financing the Future. In that same year, we were appointed co-chair United Nations Environment Program for Finance for Africa and the Middle East. In 2009, we launched what we called first ever corporate bonds that was certified by Climate Bonds Initiative. And in 2020, that bonds was cross-listed on the Luxembourg Green Exchange. In that same year, we established Sustainability Champions Network, and at the same time launched what we call inaugural Green Bonds Impact. And as I speak to you now, we have Access Sustainability Academy that tries to groom future ambassadors for sustainability. So as you can see, Access Bank, whatever we do is embedded, and we have sustainability embedded, and it drives whatever our actions are. And now, in terms of sustainability, what our approach is integrated across our businesses on 4 levels. And we say, how can we run responsible and profitable business? And we also ask ourselves, how do we shape a more environmentally safe future? I.e., what projects do we finance that have environment at heart? And then what positive contribution can we also make towards the countries or the communities that we serve? And the instance that I can say is that in the midst of this pandemic, COVID-19 pandemic last year, 2020, the bank in Ghana contributed over 1 million Ghana cedis to support those communities that we operate in. It never ended in Ghana. Wherever we are in Africa, in the world, Access Bank impact, as far as alleviating the impact of COVID-19, was also felt by way of various contributions. And then finally, the 4th pillar is we also support international agreements. And as I speak to you now, we are signatory to the United Nations Global Compact. We also a strong advocate for SDG, that's Sustainable Development Goals, which seeks to tackle the world's economic, social, and environmental challenges. So with this, at the heart of what we do, in 2019, like I said, we launched our first ever green bonds that raised 36.3 million fixed bond, a fixed rate senior unsecured bond that is supposed to finance various energy, environmentally friendly projects. And this bond, like I said, became the first ever bond in Africa to be certified by the Climate Bonds Initiative. And that goes to affirm the bank's leading position in the African sustainable finance market. The bonds, as I said, 36.3 million is available to support financing flood defense projects and renewable projects that have long-term sustainable impacts. It didn't end there. We also have what we call green subsidized loans to also support environmentally friendly projects that support decarbonization. And the next slide will highlight some of the projects that the funds from the bonds have supported. You can see from the first column, we have flood defense project that was supported in Lagos to put the environment back in order. We also have coastal protection projects that was also supported with the funds from the green bonds. The same funds have also gone to support solar energy projects and also greenhouse gas emission projects. And in Ghana, 2018, during our 10th anniversary, we also launched what we call Bag a Smile campaign that made it possible for us to design bags from recycled materials to support school children. In the same way, our processes automated across wherever our subsidiaries. That have also resulted in about 30% cost savings, from the processes that we embark upon. And then as part of our donations to 2018, we donated recycled school bags to pupils in deprived communities. And those schools are Kumasi LA Primary School in Kumasi, Takoradi, and the likes. It didn't end there. We also, like I said, COVID-19 pandemic, we also supported massively 1 million Ghana cedis in all the various communities that as a bank, we sell from Ghana. Now, let me take you to the funding options that we have as a bank to support, since we believe in sustainability. In Access Bank, whatever we do, when a customer comes to us for funding, we just don't consider financial criteria to determine a yes or no answer. We also consider the impact as far as the environment and economic are concerned. So if your environment doesn't pass our set criteria for economic and environmental impacts, we don't give you the approval. So that guides whatever we do as far as the products or the finance and then that we offer for clients to support projects. So these are the projects that we propose as a bank to support with the green bonds that 36 million we raised to support. Now we're saying that efficient green buildings, that is in line with Goal 11 of the Sustainable Development Goals. That seeks to sustain cities and communities. In this, for this project, what we seek to do is like we support projects or renovate projects that have existed, that's recognized to be environmentally friendly and that meets environmental standards. Without that, we don't support. And the green bonds can be assessed as either a term loan, a time loan, overdraft, certificate discounting, and what have you. In the same way, we also have what we call sustainable waste management project. That also falls in line with Goal 7 of SDG. That also speaks about affordable and clean energy. In the same way, it also falls in line with Goal 11, sustainable cities and communities, whereby we seek to ensure that whatever project we finance seeks to minimize waste. And then how can we effectively, efficiently collect waste and recycle them such that the impact on the environment becomes not so disastrous for the areas that we operate. So those funds are also available to support that project. We also have clean transportation funding, whereby in line with Goal 13 of SDG, that also supports climate action. We seek to support projects that seek to have low emissions. And then as I speak to now, we're talking with our counterparts in Europe, KfW, to support what we call electric cars in Ghana. And that project is also being discussed that have positive impacts on the environment. It doesn't end there. If you come to this slide, we also have sustainable water management. That also falls in line with Goal 6 of SDG, whereby we make sure that water is collected, treated, and recycled to make sure that we don't waste water to have disastrous impacts on the environment going into the future. What sort of a world are we living for the future generation? It goes to number 7, climate change adaptation, renewable energy, and the likes. We also have what we call green trade, whereby we support companies. No, Ghana is a sort of import-dependent country where a lot of what we consume here are imported. Now we ask ourselves, whatever we support by way of trade facilities to import products into Ghana, Does it fall in line with goal 3 of whereby the product comes to the country support promotes good health and well-being? If it doesn't pass that criteria of goal 3 of SDG, we don't support it. So that is what the fund that we've assessed by the Green Bond is here to support. Like I said, it cuts through. It's not cut as in stone. So once you approach us as a bank and you have as a project that you want us to support, we sit down with you. We give you the informed advice, and if once it meets that criteria, be it a retail, corporate, commercial, or business transaction, we are there as a bank to support you. We are a universal commercial bank, so we don't just focus on these global sustainability projects. Besides this sustainability at the core of what we do, there are other products that we can also provide to support you. So once you approach as a bank, come to us, let's hear you. We sit down and give you the informed advice. We prefer solutions to suit whatever you need as an entity. So that's my presentation from Access Bank. Thank you very much, everybody.
Thank you very much, Philip, for that great presentation. And it's good to see firms like yourself spearheading the efforts on green finance, and congratulations on the issuance, on the green bond issuance. What I would like to do, and we have a great panel here. So for Anel and for Sheikh, I've been reading about some of the work that you've been doing, and I'll be grateful, and starting with Anel, if you can tell us a bit about how you're looking at green finance in the context of your company and how you manage that. That would be great. And then I can go to Sheikh and then to the members within the studio. So please fire away.
Yeah, thank you. That's a sensational question, Eric. So I come at the green finance environment from a traditional banking background. I was at Barclays for 10 years, and that's how I initially left South Africa and flew on the wings of the Blue Eagle and lived in Dar es Salaam, Tanzania for 2 years, in Accra for 2 years. And it was really while I was treasurer of the bank in the Seychelles that the green finance movement crystallized. The Nature Conservancy walked into my office one day and began to lay out what would become the world's first blue bond in the Seychelles to protect an area of the ocean the size of France. And having lived in many markets, some frontier, some emerging, and some more mature, I sat there just absolutely in awe, recognizing the opportunity for all of us on the continent and all the markets we've lived in. But at the same time, I thought, we've recapitalized banks. In Ghana, at the time, Franklin Templeton had just sort of finished the big Government of Ghana bond, which was the biggest in sub-Saharan African history at the time. And I thought, we know a lot about risk, but we really don't know how to look at a portfolio through a sustainability lens or a climate lens. And at the same time, I recognize the language of finance changing. And I thought that if we don't bring a capability to project developers on a continent where 80% of projects don't even reach financial close, we risk as an entire continent being left out of this transition. So that was sufficient enough for me to leave banking and begin to think about what is this capability that we need to put in place to accelerate the flow of capital to emerging markets. At the same time, I was bothered by the fact that globally, you hear things like $4 trillion in negative yielding bonds in Japan alone. So it really struck me that there's no shortage of money, but somehow there are worthy projects on the continent that don't get the finance that they deserve. And so we set out to answer these questions, speaking to investors in the global north, in Europe and the US, around what is the blockage to flows of capital. Already understanding that project developers have this burden of, number one, bringing their projects to market in a bankable fashion, and now facing this potential additional risk of having to organize their data to meet sustainability mandates and tap into green finance. And what we found, really speaking to the likes of the New York Pension Fund, who have a $3 billion mandate for Africa and not $1 allocated, was that they felt they didn't really understand the continent very well, and they certainly didn't understand the climate-related investment opportunity. And then the second challenge and feedback that we got from engaging investors was this one around check sizes and aggregation. And that's really how the Igugu Global solution started to pull itself together. And what we began building is what we call a first of kind climate adaptation and access to market platform that really allows project developers to manage their sustainability data and then tap into this green finance registry that we've built across the spectrum of finance, from development finance institutions to banks and private equity. Because really the only difference between vanilla finance and green finance is this condition around being able to maintain transparency around the underlying use of proceeds and demonstrating that that is going towards an environmentally beneficial cause. So we definitely felt that that was a digital capability that needed to happen, and really that by putting that in place, we can catalyze a carbon transition, because Africa is the highest point of leverage when we think of our climate future.
Oh, no,
so that was briefly how sort of the thinking behind how we started. And in terms of where we started, the only place that seemed right for us to start was Lagos, Nigeria. Axis Bank was bringing to market the Eco Atlantic first commercial green bond on the continent at the time. And the curiosity in Nigeria, the appetite for green finance, and the need in terms of developers coming to market was just robust. And that's where we got the most engagement.
Sure. No, thank you very much. And I mean, that's an amazing story. And, you know, it's one that sort of repeats itself even in Ghana now in terms of access to that finance. So it's great to hear that you're building a platform. And I'm sure that we will do more with you as we go along. Sheikh, I know you've done some really interesting things on your side, on the development side. So it'll be great to hear about you and your examples of green finance and how that has panned out.
Yeah, thanks for that. Well, so our journey is actually interesting as to how we landed in the green finance space. You know, we're a traditional investment management and development company, and so you know we started a shopping center project in Abidjan. For those that are in Accra, think of developing Accra Mall, basically. So we're developing something that is a similar size and to Accra Mall. And as we did it, we knew we wanted the building to be certified by one of the international frameworks. So there's a number of them. There's LEED, there's BREEAM, there's EDGE. And in the end, we kind of didn't really have time to do that in the foray of the development. But the team was really focused on designing a building that was sustainable, and that had all the different elements to make sure that it was an optimized building from both a CapEx and an OpEx perspective, so that the operational costs would be managed. So that's what we did. And after we opened the shopping center in 2018, we went back and decided to go with the EDGE certification. And so we, did the certification after we opened. So it was a long process for them to go and audit and see what we did. And it turned out that we actually designed a phenomenal building from that perspective that exceeded a lot of the threshold that were set around materials use, energy efficiency, etc. Threshold is typically around 20%. We're exceeding it between 30 and 45%. So that was great, being able to get that afterwards, and really validated a little bit of kind of our thesis from the beginning, which is, you can try to make sure you get your returns, and at the same time, you can make sure that whatever you're doing is climate friendly and efficient. And for us, this was like the direct proof of the pudding. And so on the back of that, we thought that it was a good time to try to access the green financing space, because we always had the view that over time we would be raising green financing to kind of sustain to fund our projects. And so we decided to do it this time around by refinancing, because it was a little bit easier for people to digest than trying to raise a bond for a project on a greenfield basis. So, we looked at different options, which was, going directly with specific institution or doing a private placement bond and doing a regular bond. And we decided to do a private placement bond in Côte d'Ivoire. And, private placement bonds are basically bonds. The only difference is that, you know, you can only sell them to investors that to institutional investors, basically, and that they're not traded on the stock exchange, but the process is the same. So we had to get a rating by one of the local rating agency that's called the Bloomfield. We need to get a visa from the regulator, the CREPMF, which is the financial sector's regulator. And we also needed to get the different accreditations so that our bond can be labeled green. And you know, we did this in 2 steps. Typically, people go to this specialized consultants that can basically approve your framework and how you're going to report your use of funds, etc. So we did that with the NLV, but we also went a step further by also getting the wrap from the Climate Bond Initiative, which is basically the highest wrapping you can get for a green bond that you're issuing globally. And we did that. So, you know, if you look at all of the steps, basically, you know, tick the box on all the standards from a global perspective. So if we're issuing a green bond in Denmark, then, you know, it's more or less what we would be doing. So it's on the back of that that we then went to the market to market our bond. Obviously, since it's a regulated thing, you need to have a regulated arranger and broker, which is a local firm in Abidjan, that did that, and we approached a number of investors in the region, and it was, you know, very well welcomed, and we were actually 30% oversubscribed on the issuance, so we weren't even able to satisfy the demand, but that's, you know, a good place to be, right? Because now we know that there's appetite, and there's a number of things now that we're thinking about doing in the future, where we know we'll be coming back, you know, to the market to get you know, green financing. And really along these lines, basically at some point, you know, we're most likely gonna take the zero carbon pledge, so that, you know, all of our developments basically, you know, will have a target to go towards zero carbon. Obviously, this is a big commitment, so we're kind of working through now our ability to sustain and respect that across the different things that we're doing, because we're doing residential, you know, we're looking at stuff in hospitality as well, on top of commercial, so with the shopping center and office. So we're kind of trying to work that through, see if by next year we'll be able to do that, which will allow us basically for all of our platform to consistently go after green financing.
Sure. Look, this is a fascinating story, and I'm sure a lot of people who are online who are watching this are particularly interested in your story. And so, you know, you've spoken around the various sort of hurdles you had to jump regulatory-wise, investment advisors, etc. In terms of the cost of the green finance, did the extra advice you needed negate essentially the cost of the funding that you were essentially getting? In that, you know, even though typically green finance is not necessarily cheaper than your regular commercial finance, sometimes it can be a little bit concessional. But was that sort of eroded by the fact that you had to go through several advisors and go through, you know, ratings agencies, you know, some kind of independent entity to look at the bond and give it all the accreditation it needed? What was it in your case?
So that's a good question, but there's a couple of different elements. If you take out the green out of it, there is the kind of private placement route, and then there is a traditional banking route. So there's a bit more friction if you go and issue a bond, obviously, because you need a rating and all of these things. If you do bank debt would have been the easy way out. You could have gotten relatively comparable in some ways levels of financing, but, you know, this is, for us, that would be narrow-minded, right? Because we're looking 5 steps ahead, and the view is with the green financing, you can start to attract investors that you wouldn't be traditionally be able to attract. So investors regionally and in other places. So from the cost perspective, that's the first bet that you have to go through. And obviously, you can get access to more capital if you go to the markets and if you go to the banking sector. And the banking obviously is a more constrained, has a lot more constraints around how you're lended money compared to a bond. So from that perspective, a tiny bit more of friction. Now, the bond, we could have done a bond without making the green bond, and there wasn't any material difference between doing a green bond and a regular bond. And the pricing, we're still trying to figure out, to be honest, whether you're getting that premium for the green insurance. You can't really make that a state. There's not enough data for us to be able to make that statement because you don't have enough comparables, right? People that have issued regular bonds versus green bonds with similar tenure, similar type of businesses. So it's very hard to make that statement. So could we have gotten a comparable rate? Probably. Maybe slightly better on the margin, but that's not really the deciding factor in the end. I think the fact that you're able to still remain competitive and have the agenda of being green, I think is where there's a lot of value, and where I think you're going to start to see a migration from a lot of institutions that will start to say that they only invest in such product. But for that to happen, you need to have more of such product available in the market. So I think that's where, by the time you start to get a bit more volume, and I think what you're going to see is everything else being equal, people going towards these sustainable financing options over regular financing options.
Sure. So just two more questions before I go to Nanayao and Ben. And so in terms of, I think for most people within the real estate industry, most people have accused the real estate industry of dollarizing most African economies because rents, building construction costs are all based in dollars. So the finance generally comes in USD. But what portion of, let's say, for your bond was subscribed locally by investors? And how much interest did you see from not only, let's say, the international organizations, but across other West African countries, whether there was any particular interest in it? And then the second one is, in terms of managing that FX risk, how do you do it within your real estate portfolio? Hopefully we can get two quick answers to that, and then I can just go over to Nanayao and to Ben.
Yeah, apologies for the long answers. I'll make you a bit jealous from that perspective. Côte d'Ivoire, I think, doesn't have the same issues as Ghana and Nigeria, just because the CFA is pegged to the euro, and basically people equate the CFA to euro. So we don't really deal with currency risk in the same way. Our leases are in local currency, and the debt we issue are in local currency. So the bond is 100% local currency. It's 7.5%. We're in a low inflationary environment, 2 to 3% inflation. So that's the one advantage with this region, where you don't have to deal with that. I think in the Ghanaian and Nigerian and Kenyan context, it's a bit different. Well, it's very different because you have the mismatch between your dollar leases that really are local currency leases, because we've seen it during the crisis. You sign a lease in dollars, and then the currency goes down 25%. You're going to renegotiate your lease. I mean, there's no other way it's going to happen. So it was a virtual dollarization, and then you have the debt in dollars. So I think the issues that you have to deal with from a Ghanaian perspective, this is one point that's going to be a lot more complex to deal with, and in the long term, there's really the fundamental question as to whether the leases are really going to remain in dollars, or whether, as you've seen in some areas, indexed to dollars but in local currency, and how you play around with that, and maybe the trickle down to when you issue a local bond, your ability to do that.
Sure. No, thank you. No, sorry, go ahead.
Sorry, if I may just jump in on that one, Eric.
No, go
I
ahead.
think we'd be amiss to not recognize that, the whole carbon transition and the green finance opportunity is also one that is an opportunity for Anglophone Africa to mobilize domestic markets in a way that they haven't been before. Yes, there's the dollar factor, but we look at Nigeria, for instance, that went from never having issued a green bond to now being called almost a serial issuer, the first commercial green bond with Access Bank. There is a unique opportunity there, and Sheikh also has experienced it in his oversubscribed bonds in Francophone and in Cote d'Ivoire, to engage the communities that we're building to make more resilient, particularly because there is a shortage of assets, right? The capital markets of Nigeria are less than sort of 10%, the total market value is less than 10% of GDP, whereas you look at a market like South Africa, where the JSE volumes are sort of 300% of GDP. So there's a fantastic opportunity to, by developers coming to markets to raise from the local market, create new assets for people to invest in while transitioning their economies as well, which is one that I think all banks and developers should be focused on.
Sure, no, thanks for that. And so Nanaya, at IFU, how are you guys?
Yeah, I mean, for us at IFU, we approach green finance in two ways. We do green project bonds, essentially just taking underlying project risk that have strong green elements. We like, of course, if the projects have internationally acclaimed certifications like EDGE certification, it helps. And that's one we do it. And then secondly, we try to do it indirectly by giving funding to banks so they can on-lend to businesses that naturally we will not be able to do directly because of size and some other dynamics. So that's the way naturally we approach green financing. I mean, last year we did a deal in Nigeria in a company called Daystar, together with us, Proparco, Store Infrastructure, and Morgan Stanley Climate Fund. That's around $38 million in financing. And that's essentially a distributed solar transaction where you're going to have solar for industrials and corporates across West Africa. So that's one of that. And then on Monday, I'm actually signing another transaction in South Africa. That's a student accommodation transaction that is EDGE certified. And then, of course, we are doing that together with IFC and a couple of other investors as well. So that's, for us, when we look at the transaction, I think it's not, of course, we want the transactions to be green, but then we need to be convinced that the projects make sense. And it's one that we'd like to invest in. And that's one we invest in it. Aside that, we look at banks who are strong green elements and are willing to come with us and then abide by the different rules and sustainability rules that we put forward, and then we give them financing so that they can also go out and give financing to local businesses that we naturally will not be able to finance.
Are there particular sectors that you wouldn't touch at all?
Yes, I mean, as a DFI, as a development finance institution, there are sectors that we wouldn't do. I mean, naturally, we're not allowed to do sectors that have no real development impacts. So, I mean, I think classic examples are gambling and then weapons and a couple of other areas that naturally you wouldn't find DFI financing. However, I mean, for every DFI, there are sectors or areas that you are most comfortable with, and then you have a lot of experience in them, believing that you'll be able to get a development impact that we do. For properties, we don't necessarily invest in commercial properties. We don't have anything against commercial projects. It's just that for us, we think the development impacts around commercial buildings is not strong enough for us. I mean, we'll rather do a student accommodation transaction because we think that the impacts for the fact that students can actually get good accommodation for learning is good for us, and that's why we like to support. So it depends on the transaction, who's behind it, and also size also matters for us. Yeah.
Sure, great. And Ben?
Yes. Well, our journey began in terms of transition to focusing on climate and sustainable finance actually back in 2012 when we were mandated to act as a transaction advisor with working with the DBSA in introducing the project bond.
How much time?
It says 15 minutes, but we're going to go over, I think.
Yeah. I mean, I was just going to ask you like one more question and then throw one just generally to everybody.
I'm going to try to cover a lot with this.
Yeah, so that's
that it
that's
checks
fine.
a couple.
Yeah, that's fine.
Yeah.
Yeah. I just wanted everybody enough time to speak, and then maybe after we can just go to the Q&A. Yeah. Okay.
And we're back on? Okay, great. So the experience with advising the experience advising the DBSA and working with the JSC and introducing project bonds as a means to and as an innovative way to finance the gas to power program and a number of renewable energy projects allowed us to
Frozen on here. Yeah.
Can we claim our extra time back? Okay. And so we began building a team that could basically provide end-to-end solutions in terms of designing green bond the green bond frameworks for respective clients. We've done that by bringing on partners such as Green Square Ventures to assist us, and we can also act as a sustainability manager, which is obviously key. So in terms of that particular experience too, it's allowed us to work closely as one of the contributors to the country financing roadmap for Ghana, Ghana being the first to actually bring one of these to market. Yeah, I find it, that all said, I find it a bit fortuitous that we're speaking today, a day when Bloomberg has announced that the green bond market is now a $1.2 trillion market as of yesterday. Something just started from 3 billion 10 years ago. 3 billion about 10 years ago. And in terms of how green bonds can be utilized, I find it interesting that, raised the point about, a lot of projects not being able to access funding because most of it is in hard currency. Ghana, I think, is doing a great job in bringing about the green bonds framework with the SEC and also the NPRA, providing certain incentives to pension funds to as far as allocation of their funding to support green bond initiatives. These initiatives are key because obviously now allows some of the smaller transactions that require local currency to be able to access that. So all these points I think are quite significant. And obviously the final point I want to highlight is that having worked on issues around SDGs, need to impress upon the fact that climate change is quite real, and that 40% of CO2 emissions are actually generated from buildings. So it's significant that we keep that point in mind, and green bonds, sustainable bonds present a significant way to finance green buildings and related infrastructure to really make a significant dent in that reduction of CO2 emissions that comes from the building and real estate sector.
Sure. No, thanks for that. And I mean, it seems like a lot of work has gone into green finance, being able to do that on the construction side. But in terms of some of the work that we've done at our firm, what we realize is that the construction part is pretty well taken care of through the project finance. The sort of secondary market, once the projects have been completed, sort of takes over. That's why you're seeing some of that. But there's one piece missing, which is essentially the people who are going to own these homes or these facilities. Now, is there any type of green funding for people who want to actually own these sort of properties? Because the majority of the number of people, and I think when we last looked at the numbers in Ghana, there was something like just over 6,000 mortgages in the country of about 30 million people. But yet there are, I think, over 10 million homes. So how are people funding their homes? A lot of them are using their, their change and, using 30, 40 years to build a home, a brick at a time. but what other products are you seeing in the market for the retail investor? Oh, well, not only the retail investor, but the people who actually want to own these homes long term and be able to pass them down to their children, etc. And Anel, if you have any,
Yes,
I'll go around on this
I'd love to speak to that. Yeah, absolutely. You know, Eric, our theory of change is that all finance is green finance and people just don't know it yet. And we're seeing that across the spectrum of capital. We've gone from green bonds and green project bonds to banks now seriously thinking and rolling out green home loans for people who want to sort of manage the efficiency information around their house. The IFC Edge tool allows people to do that and even has a capability of sort of share data to your bank. And what we're really seeing is this organizing and at a broader level, at a continent level, of a co-financing theme that's filtering down from the development finance institutions into the banks and enabling the banks to offer these propositions right down to the retail investor. In Ghana specifically, I can speak to APSA Ghana, which is the member of the APSA group. They are beneficiaries of a 470 million IFC greening facility that just got a top up now during COVID. And part of that is particularly ring-fenced to extend the green financing proposition in Ghana, in Seychelles, in Kenya, and Tanzania. So I definitely think that the retail investor is only going to have more and more options. And we see these themes as sort of global sustainability mandates pushed down on how financial institutions capture and access finance themselves.
Sure. And Sheikh, for you,
I think if I take one more bite at the apple, I think this all falls into, you know, in the context of our business, Igugu Global, what we do is map not only the physical climate risk, but what we term transitional climate risk. And that's understanding sort of how the laws in the sector are changing to support or disincentivize carbon-laden projects. And I think to Ben's point around sort of all of the work that's already gone, the thoughtful work that's happened in Ghana around what's the best sustainable bond framework. At a continent level, the Climate Bonds Initiative, we had the pleasure of working with them to bring to market the Africa Green Bond Framework to begin to set in place a taxonomy for people to adopt. And each of these will be sort of specified in a country context. But all around, outside of sort of the hard green finance taxonomies that are crystallizing, you see that across industries, corporates are recognizing the opportunity. So in Kenya, Kenya was the first actually where the pension funds came together to revisit how they make capital available outside of their traditional insurance mandates so that they can invest directly into green infrastructure. And that was a critical part of how the Acorn Green Bond, Kenya's first green bond, came to market. And so off of the back of the excitement of sort of pension funds being able to put a little on the table and issue a new and exciting oversubscribed project, you see insurers starting to sit up and take notice in other markets, and the same begin to happen. In South Africa, on the back of that excitement in 2018, just at the start of this year, South Africa pension laws have been reworked so as to allow pension funds to participate more directly in the infrastructure opportunity and the green transition opportunity. And we're beginning to see this theme, right, of pension funds wanting more direct access to real assets and using the sustainability roadmap as a way forward to do that. So it's the transitional risk opportunity that's really changing across sort of hard finance laws, but also the mandates around how we pull capital together and get it ultimately to developers and the benefits to the retail consumer at the end.
Sure. No, okay. Thanks for that. And Sheikh, just on your side, in terms of how are you managing the, I guess, the end user of the final product? Because a green building is great, but if people can't afford to live in them, then really and truly there's no point. So how are you managing that at HC?
Yeah, but there's two angles to it. Is to, you know, whether you talk about the commercial side of it and whether you talk about the residential side of it. And so, what we're starting to see, and that's why it's exciting, because we're really at the beginning where everything is being created in front of our eyes, is, you're starting to have side pockets inside the banks to finance, green developers. And then the next step is to have side pockets that are, sometimes funded by some of the DFIs or certain institutions that will go towards funding mortgages for developments that are green. And then the next step after that, it's going to be, I think it's going to grow from there and become kind of a specific product and a norm. But it's kind of, a bit of our job. So, we're working on something on the residential now where we're trying to make sure we get both sides of the equation. So I think it's going to come from the market perspective, pushing some of these things, because you already have certain programs or certain banks that are funding parts of developments with part grant, part loan, if what you're doing is green. So if you're doing some solar panels, then you get part grant, part loan on a concessional basis for that. But this is kind of just I think the beginning. And it's going to come, I think, and I'm a bit biased, but from the develop side to make sure that we create the opportunities for that to happen and facilitate and differentiate what we're doing, so that actual end users say, well, I should go for that because there's specific financing already in place, etc. But it's not going to happen on its own. Somebody has to kind of stir the pot for it to happen.
Sure, thanks. And for Ben and for Daniel, I have a slightly different question, in that although the finance seems to be available, a lot of it seems to have been negotiated bilaterally, apart from those who have been able to access the capital market. Now, how much of that finance, with the DFI should come through the capital market? So, for example, if any of the banks in Ghana was going to get access to green finance, I mean, it makes sense to me that you would have banks establish green bond programs under which they are financed, because that helps develop the market. And sort of, what is your experience on that? I guess at AFU, and then after that, Ben can take a stab at that for us as well.
Sure. I mean, I think at the moment we're starting to speak to a few banks in the sub-region, trying to see if we can be part of their green bond programs. I would say since we actively started investing a lot in the green sector, we haven't done any bonds. I mean, to the capital markets. We are speaking with, I mean, I can't mention names right now,
sure,
because it's confidential, but I mean, there is an appetite definitely to join other institutional investors or retail investors to be part of the capital markets for green bonds. So for us, that is a direction that we want to take, and we're actively engaging in that respect. Yeah.
Okay. Yeah, I can actually touch on a little bit on the earlier question. One of the things that we actually been working on is we've been assisting the National Mortgage Housing Fund here in Ghana in terms of coming out with its strategic plan, with an emphasis placed on the possibility of utilizing mortgages. Fine. Whenever I open my mouth. Okay, utilizing green mortgages. So that is something that's in discussion. And in terms of our interaction with some of the local banks, we've really been placing an emphasis on them seeing the benefits of offering more green retail products, with the idea of really focusing on green mortgages as a possibility. And in doing so, incentivizing customers to utilize solar panels and actually get their homes to a point where they are green, given the cost savings which are associated with that, and that potentially providing an opportunity to make it easier to service these mortgages. So that's a conversation that we've been having in terms of trying to get these financial institutions to really jump on that particular bandwagon.
Sure. Look, thank you very much for that. I mean, I think we want to open up for questions now from the audience and from people who are at home. So please fire away with your questions for the panel that we have.
So I see some questions in the chat. I'd like to bring it up for you.
Sure.
So there's one question that actually was for Access Bank. Yeah, one Nelson is trying to find out. I would like to know the coupon rate on the Access Green Bank, the Access Bank Green Bond. Have they been able to consistently pay this coupon rate? Secondly, do investors receive reports on the performance on the green bonds so far? How does the risks of the bank affect the performance of the bond? So that's a whole pack that is going to ample for Philip if he's still online. He's off. Okay, so then we'll jump that. Yeah, I think that's the main question so far. So maybe I'll just open up to the room. Oh, is that question?
Perhaps.
Oh, okay, sorry. Maybe you want to take it for Access?
Yeah.
Yeah, that's fine.
Yeah.
Or no, I didn't want to take it to Access, but I thought perhaps an important aspect of this price conversation that we're not bringing to the fore is no, not the price conversation as well. Well, when we think about projects in the aggregate, is looking at the benefits that green finance brings us. I have two ideas really competing, but I wanted to, oh yes, it goes back to building materials and being expensive. The point was around, an important aspect of thinking about green is also thinking about how we can use local materials and drop the cost of financing in that way by using sort of indigenous, locally sourced materials, because a huge aspect, even in how the EDGE calculator works, is sort of quantifying the embodied energy in whatever project that it is that you're bringing to market. So just as we think about, the price of bringing green projects to market, it's so intricate and not necessarily just the ultimate yield. That's one. I think the conversation around investor appetite and demand and how you consistently see green bonds oversubscribed through that values alignment definitely drops the cost of searching for finance in the long run as you build these long-term relationships with providers of sustainable capital. Access Bank also critically spoke about the green trade opportunity. And I think that's one that's slightly beyond the scope of this conversation. But in terms of allocating capital, it's not just, is the trade, the product sort of beneficial? There's also a real aspect of the green trade question that has to do with nearshoring and shortening our supply chains and making communities more resilient by having domestic lightweight manufacturing facilities, particularly in the food space, which creates a significant opportunities for project developers there from a green trade supply chain nearshoring perspective.
There's another question, right?
Right, but just a quick one as well. So we had a bit of technical hitches during the finance session. So we just have a few more minutes added. So those of you waiting for the next session, which is on the zero-sum game, please just give us a few minutes. We'll be wrapping up and then getting into that. So
sure.
Eric,
There was a question from somebody who's developing some property in Accra and had asked how they access a green finance. I think Sheikh spoke about that in quite broad terms. So maybe just a quick summary from your side for the benefit of the person asking the question, Sheikh. That would be grateful.
Sure. I guess very succinctly, there's two ways, I think. One is if you decide to go the Acorn way or our way by basically doing a bond, whether it's listed or not listed on your local markets. Typically, the markets have their own green bond framework. So I'm assuming in Ghana, I haven't researched it, but I'm assuming the regulator has some type of framework for green bond in place as to how you qualify. And then if that's the case, then there's all these other things that you might have to do, a rating, as I mentioned, getting the certifications from the third party that can and kind of bless you. And the underlying is your building needs to be either EDGE certified or one of the other recognizable certification mechanisms. So you have LEED and BREEAM. So you have a number of them, whether it's in the US or in Europe. So that's one option. Option two, you have to check with specific banks. I know in Côte d'Ivoire, there's a specific bank with Société Générale that has a program. So if you have a green building that's EDGE certified, then they automatically give you there's a separate window to fund your project at a lower interest rate. And there's also a subpart that you get as a grant as well, depending on some of the materials that you use, if you want to use solar panels, etc. So I think depending on the market you're in, you have to check, but I'm pretty sure if you look closely, even in Ghana, there's probably at least one or two banks that must have similar programs in place.
Sure. No, thanks. So I think that answers Bernard's, the previous questioner's question. But there's another question on here with regards to solar power and funding for that kind of a project.
Yeah.
Would you want to answer that? They're asking how they can get access to that funding for solar projects. So,
No, I think for solar projects, you would have to approach us essentially, and then explain to us how the project is being developed, and then also what are the dynamics around the projects, just so we understand better. But yes, we can do financing for solar projects. There's no problem with that.
Yeah, and I think piggyback off of what you said, I think one other point to emphasize is at what stage of the project life cycle are you at? You're at the early stage, or are you looking for expansion capital to those are key pieces to really keep in mind. There are quite a number of crowdsourcing platforms that have been coming up, i.e. Franklin Green, et cetera, which are really focused on supporting solar projects in particular. So I think those are something to keep in mind.
Sure. And I think there's one question about how we extend mortgages from Mr. Echo Spielgaber, I think, how we extend mortgages to many more thousand households. Now, we have a view on this. The more green finance that's available for affordable housing means that ultimately people would be able to get into more homes. And once that initiative kicks off, and I think most of the panelists have spoken about, it's incremental. So we start off with getting the programs on the way, getting the frameworks in place, and then the funding coming. Because 6,000 mortgages really doesn't work for an economy that's looking to grow. And hopefully with the green finance, we get to a point where essentially there's more affordable housing because people have implemented things that are safe for the environment, and there's funding available for it. And that hopefully fills the gap that we have. I think there's just one more question that I saw with regards to getting the local banks around green financing. Now, look, I think from CalBank being, we're here today at CalBank, they've been very supportive of the green initiative. Access Bank, there have been several other banks locally that have. I think a lot of this comes down to some of these webinars that we're having to sort of inform the public about the availability of this kind of finance. But for sure, if there's any information you require, if you go to the website on the Green Building Summit, you'll find all the information you require there. But there are a lot of banks that are on top of this, and I'm sure you'll be able to access that funding. But I think we've come to the end of this, and I'd just really like to thank all the panelists for your time. For those of you who are spending your time with us at home, we really appreciate it. And I'd like to thank my co-panelists for being here. So thank you all very much for being part of this, and we'll go on to the next session. Thank you very much.